What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we did see a spike in volatility and we did see some selling across the board. Will it materialize, or was this a buy the dip opportunity? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did see a spike in volatility today, and we were having quite a nice day, slowly creeping up towards all-time highs. And then obviously we got that bad news and we did see selling across the board. Now the good thing to note about today's price action is we did actually hold up above that very critical support level at 412. We did get a price action close below the 5 EMA, but we obviously still have this very strong bull trend with price action holding up above support. So even though we did see volatility today, there was nothing out of the ordinary that says that this bull trend is in jeopardy or the price action closed below a critical support. Right now, 412 is one of those critical support levels, and we did close above that level. We need to see if the selling is going to pick up starting tomorrow, or if this was just a one-day panic sell event and it could have been a great buying opportunity. Now, the one thing I like to look at when we get red candles is the volume, and we can definitely see that we did have an increase of volume today. Now, if we look across the board on the volume, you can still see that we didn't go to some crazy amount of volume of selling. This was just a normal panic selling event because there was a lot of uncertainty in the market, and there was definitely a lot of people covering their positions, going to cash and waiting out to see what was going to happen. So we will need to watch the volume very closely, because if we continue to go lower in the price action, breaking through critical support and all on higher volume, that's going to be an indication that the big money is dumping out, and we don't want to be in this market until we see where the market bottoms out. But right now, I don't think there's a reason to be panic selling. Just play the market objectively and watch the price action at the critical support levels. We do have critical support at 412. We will have support at the 13 EMA right around 411, and we also will have support right around 408. You could see the 20 simple moving average is right around 407 now, and don't forget, in a bull market, as long as the price action is above that 20 simple moving average, we still have bullish price action. All of the moving averages are still trending to the bull side, so there's really no reason to just assume that the market is going to continue selling. If anything, the price action showed us that the selling is not likely to continue, and we saw people buying that dip up. Let's jump over to a 1 hour chart and you could see exactly what I'm talking about. You could see from yesterday's lows, we did see the price action wick down into that area, and it was followed by huge buying, and we never retested those lows. We could still retest those lows as soon as tomorrow, but that is a good indication that buyers stepped in at that level and they bought the dip. That's what you want to see in a bull market. So right now, it's possible we bounce off this 412 level and start continuing the bull trend back to all-time highs. Don't rule out the fact that the market is still bullish. One-day panic selling events usually turn into great buying opportunities when you look at them in the rearview mirror. You know your risk is defined by a close below this critical support level, and we can see yesterday's lows on closing prices on this 1 hour chart were right around $411. So back to the daily chart, there's no reason to panic sell. Should you reduce risk and not be over leveraged? Of course you should. Don't be over leveraged at all-time highs, and make sure you're selling the higher the market goes. Always have that cash position ready, and get used to buying on red days and selling on green days. So personally, I think we're going to look back at this day and we're going to think it was a great buying opportunity, but only time will tell, so we need to watch the price action at these critical support levels. Upside resistance to watch for going in tomorrow are going to be 415, 417, and 420. Remember, the price target we're watching for is still all the way up here at 426, so we still do have quite a bit of resistance to get through before we get up to that next price target. Also remember that we did get a rebound yesterday from that 2-day pullback, so today's selling actually helps reset the technicals in this market even more. Remember, the more selling we see, the more likely that we got people panicking and going into cash and possibly even trying to short this market. Shorting and cash positions are both catalysts for all-time highs. If you get enough people in cash, eventually they will FOMO into the market at higher prices. If you get enough people shorting the market, eventually they will get short squeezed and become net buyers, pushing the market even higher. So right now, looking at the technicals, because we're in such a strong bull market, it does favor that we're likely going to see higher prices coming from these levels. Next up is the NASDAQ 100 QQQs ETF, and we saw the QQQs dropping over 1.2% today. We did get a price action close below the 5 EMA, and we did hold up above that critical support level right around 334. Again, that is a bullish indication that buyers stepped in at support and bought the dip. There was definitely a lot of panic, and we can definitely see a little bit of increase in volume down here. Again, the volume does not look abnormal, and it doesn't look like we saw a huge wave of selling. More than likely, that excess volume was just retail panic, and the big money players are still not selling out of their position. That could be subject to change, so watch critical support at 334. If we break down below 334, don't forget we still have the gap to fill at 332.50, and that 20 simple moving average on the triple Qs is now sitting right around 331, with another critical support level just below at 330. The trend is still bullish and the price action is still holding up above critical support. We will have upside resistance at 339, the previous all-time high at 342, and then the next price targets above are 345 and 350. So remember to stay objective and watch these critical levels on triple Qs very closely. A break below 334, you're looking for a possible retest of that 20 simple moving average at 331, and a break back above 339 is favoring all-time highs, and we're likely going to see those price targets at 345 and 350. On the Dow Jones, we dropped over 0.9% today, again holding up above that support level at 337. We closed above the 13 EMA, we're still in a bull trend, and we still do have price action that held up above the support levels from yesterday. So downside support on the Dow Jones is going to be 337, and the 20 simple moving average is now at 335. Upside resistance is going to be 341, and the next price target at 347. Next up is the Russell 2000, and we did see the Russell 2000 also holding up above support. The Russell 2000 was looking very bullish intraday before the news came out, and we were actually breaking out and looking like the Russell wanted to start running. Obviously that changed and we did see selling, but we did close right on top of the 5 EMA and above that 20 simple moving average. That 20 simple moving average is now positive sloping, and these moving averages are very close to stacking to the bull side, where we'll have all of the moving averages stack full bull, which means all of the moving averages are going to start pushing the price higher. Critical support for the Russell 2000 is going to be at 221 and the 50 EMA right around 220. A break below the 50 EMA means we could come back down and retest 215. Upside resistance is going to be the trendline breakout at 224, 227, and 230. On the ARKK ETF, we dropped over 0.3% today, again holding up above that 20 simple moving average. The ARKK ETF does not have any trending for the bears or the bulls, so the price action is the key. We need to see that price action holding up above that 20 simple right around 121. So that's going to be the key support level for ARKK, and don't forget we have the gap fill below if that level doesn't hold up at 115. After the gap fill, we do have a trendline support level right around 113. Upside resistance is going to be absolutely key at the 50 EMA right at 125. Remember, ARKK needs to start breaking back above that 50 EMA for a few days in a row to go back into a bull market. So ARKK is still just chopping around sideways, trying to figure out if it wants to go into a bull trend or a bear trend. You could use some bias on ARKK, and if we see the rest of the stock market continue to trend all-time highs, eventually ARKK will follow suit. But watch the price action at the critical support levels, because that's going to be the most important right now to see which direction ARKK wants to go. Next up is the VIX, which is the fear indicator, and we see the VIX going up over 6% today, and we did see the VIX getting rejected at resistance right around 20. However, the VIX did close back above the other resistance level, which is right around 18.2. So right now the VIX is definitely spiking and definitely showing some increased volatility in this market, but it's not actually materializing into anything major. We're still holding up above critical support, and the VIX is still holding down below that critical level around 20. Remember, the VIX would need to get back over the $20 resistance level for us to see major selling and more of a stock market correction. Right now, we're just in a volatile pullback, and the market is just sort of shuffling around, but still holding up above critical support. If we do see the VIX break back down below 18.2, that again is going to favor all-time highs, because that means fear is again leaving the market. On gold, we definitely saw a little bit of a pullback today, but we held up above that support level at 1776. Gold is slowly going back into a full bull trend, and we just need that 20 simple moving average to now cross back above the 50 EMA. So watch for support at 1776 with a price target of 1829. On silver, we did get a pullback since we hit that price target at 26.50. It looks like we did find support on top of the 5 EMA right around $26, but the stronger support level is going to now be the 50 EMA right around 25.74. That 20 simple moving average is positively sloping, and it is starting to get ready to cross back above the 50 EMA in the very near future. So upside price targets on silver are still going to be 26.50, and we need to break and close over that level to get to the next price target above at 27.60. On Bitcoin, we continue to see bad news for the Bitcoin bulls, because we currently see Bitcoin down over 4% and struggling to hold up above that next support level at 51,000. Remember that Bitcoin did close below the 50 EMA, and that was an indication that Bitcoin was going through a correction and we're likely going to see much lower prices. We're seeing increased volume on selling, which means more and more people are running for the door on Bitcoin and they're getting out. It is not likely to see Bitcoin going back into a bull market until we finish out this correction. So right now it's a falling knife and we're trying to figure out where Bitcoin's going to bottom. It got way too far extended on monthly charts, and I've covered this in multiple episodes from my weekend updates with my macro level analysis. It's possible that Bitcoin could drop all the way back down to $30,000. So watch critical support on Bitcoin at 51,000. A break and close below this support level at 51,000 increases the likelihood we're going to quickly drop to the next support level all the way down at 45,000. Remember that if Bitcoin closes below 45,000, that's when you're really going to see the waterfall wave of selling, and it's going to get ugly very fast. We could easily drop all the way back down to $30,000 very quickly. We're seeing that increase of volume on selling, and eventually stop losses are going to get taken out, and we're going to see that waterfall wave, which is going to lead to a flash crash. So make sure you're protecting the downside in Bitcoin, and if you're buying into Bitcoin, scale in very slowly because it's not likely going to go back into a bull market very quickly. Corrections like this take a lot of time to play out, and I always said just assume the entire month of April is going to be a correction month for Bitcoin. So we still have a little more than a week to go, so we could still see much lower prices on Bitcoin. Upside resistance is going to be that 50 EMA right around 55,000, and even if we break above that level, we're still going to find resistance on a negatively sloping 20 simple moving average. So that level is currently right around $58,000, and it's going to continue to drop each day. Also note that if Bitcoin does take out $51,000 support level, it will start forming a lower low on the daily chart. Next up is Amazon stock, and we see Amazon dropping over 1.5% today. Amazon continues to struggle at this resistance trend line, and it cannot break out and hold above that level. That level is now sitting right around 33.72, and that's the key resistance level that Amazon needs to break out of. If Amazon can break out of the resistance trend line, it could very likely hit our next two price targets at 34.42 and 34.83. Downside support is going to be right around 32.97 and this 20 simple moving average at 32.57. Note, Amazon is in a full bull trend, so I am expecting it to eventually find support and continue back into a bullish rally. On Tesla stock, we dropped over 3.2% today and closed right on top of support, which is right around that $718 level. Tesla is getting very, very close to having a full bull trend, and we just need a few more days of holding up above the 50 EMA with the price action to get that 20 simple moving average across back above the 50 EMA. So watch critical support levels at 718 and the 50 EMA right around 701. The longer Tesla can stay above this critical support level, the more likely it's going to blast through this resistance trend line and break out and start running. The key breakout level is now right around 762, with an early price target of the breakout right around 802. So watch those key levels very closely, and Tesla does have earnings coming up very soon. Remember that earnings is always a gamble, and even if the technical analysis is predicting a bull run, it doesn't take much in an earnings report to cause a huge wave of selling. So manage your risk accordingly and make sure if you're trading Tesla, you have very clearly defined exit strategies. Next up is Apple stock, and we saw Apple dropping over 1% today and holding up above on that support level right around that 13 EMA. That support level is right around 131, and we will have more support at 130 and the 20 simple at 128. Also note on Apple, we got a full bull trend, so the price action is likely going to continue to get pushed up to higher and higher prices. So watch the upside resistance levels on Apple at 134 and about 137. A break and close over 137 means we're likely going to all-time highs. Apple also has earnings coming up next week, so we will likely see a little bit of a pump going up into earnings with the price action trying to price in a good earnings report. Remember, when you have a full bull trend, the path of least resistance is to the upside, and Apple will eventually find support and start bouncing. On the financial sector, we saw selling going down over 1% today and closing right on top of that 20 simple moving average. We're still in a full bull trend, but it is in jeopardy. We need that 5 EMA to continue to stay above the rest of the moving averages, and we need to see the price action staying above that 20 simple moving average. On the industrial sector, we dropped about 0.5%, and we're still holding up right around support at the 5 EMA and still maintaining a bull trend. On the healthcare sector, we dropped a little over 0.4%, very close to all-time highs, well above the 5 EMA, and in a very strong bull trend. On the energy sector, we dropped a little over 1% today and still closing below that 50 EMA. The energy bulls need to get the price action back above the 50 EMA and need to get energy back into a bull market. The longer the energy sector stays below this 50 EMA, the more likely it's going to develop a bear trend and continue to trend lower. So going back to the S&P 500, you can still see that we do have bullish sectors. Even though we did see a lot of volatility today, we still see the VIX below that key resistance level at 20. So watch the VIX closely, because if the VIX does continue to spike, that will increase the probability we're going to see a stock market correction. But right now, it does look like this is still just a pullback because these key support levels are still holding up. So watch the key support levels very closely, and make sure you're being objective about the price action. We are in a bull trend and the price action is still holding up above critical support. That does favor higher prices and that does favor a bull market. So don't get overly bearish just because we're seeing a little bit of volatility. Also remember that we're just a few percent away from all-time highs and this market did not see a huge increase of selling on volume. So also watch the volume very closely because if we blast through a support level on increasing volume, that will mean that the selling is picking up momentum and that is a good thing to pay attention to. Also remember on the Stocks Channel Discord, I'm giving you intraday updates and analysis to help you stay on the right side of the market. I also bring new trade ideas to the Discord community weekly. If you're interested in the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of the video. Next up is our trade idea Shopify, and we have bad news on Shopify going down almost 4% today and closing below that key support level right around $1,100. Shopify has one more support level right around 1080, and if it does not bounce off this level, it is no longer going to be a trade idea because it's likely going much lower. We do have earnings coming up, but we don't want to make any assumptions on whether or not earnings is going to be good or bad. So in the short term, we still do have a higher high and possibly forming a higher low, but we need to pay very close attention to the price action right around this key level at 1100. If we close below this level right around 1079, that will mean Shopify is no longer a trade idea and you should probably cut your losses if you have any. Now, if we can bounce off this level going into earnings, there's still going to be a lot of risk because you never know exactly how well an earnings report is going to go. So make sure if you're in this trade idea or you're considering this trade idea that you plan accordingly and make sure that you have a very clear, well-defined plan. There's going to be a lot of upside resistance now to get back to the 50 EMA, which is all the way up here at 1171. In order for Shopify to go back into a bull market, it needs the price action to get back above that 50 EMA because none of these moving averages are stacked to the bear side or the bull side. So the price action is key right now, and right now the price action is favoring lower prices, which favors the bears. So key levels to watch on Shop are going to be a close below about 1080 or a close back above 1100. This is a do or die situation for this trade, and the bulls really need to show up going into tomorrow's session if there's any chance of this stock going back into a bull trend before earnings. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.